Hi, I'm Kara Murphy, and this is Money with Murphy. Let's talk about the first quarter of 2025 because, wow, it's been a ride. If you're someone who thought that the biggest, buzziest stocks would continue to carry the market like they have the last 2 years, well, the first quarter had other plans. Earlier this year, we flagged that stocks that made up the Magnificent Seven, so largely mega cap technology names, were expensive compared to the rest of the market and compared to their own historical valuations. And while high valuations don't always tell you exactly when things will turn, they do make stocks more sensitive to bad news. And sure enough, this year we've seen some bad news. Collectively, the stocks that make up the Magnificent Seven dropped a pretty eye-popping 16%. That particularly hurts when those stocks have done much of the heavy lifting for the broader market for 2 years running. But here's the bright side. Diversification was the unexpected hero in the quarter. While the S&P 500 was down nearly 5% in the quarter, international stocks, as measured by the MSCI ex-US, actually gained 6%, an 11-point beat. Even bonds did their part, with the Bloomberg US Aggregate Index up almost 3%. And that classic 60-40 portfolio of 60% stocks and 40% bonds, still down, but just 2%. A lot better than if you had been all in those tech-heavy names. And if you looked beyond the tech giants, there were some real pockets of strength. Energy was up over 9%, healthcare 6%, and even good old utilities chipped in a 4% gain. So diversification may not always feel exciting, but it definitely earned its keep in the first quarter. Now let's talk about what's driving some of the volatility. A big one, tariffs and policy uncertainty. We're seeing more noise and action on the trade front. And while many questions remain, we think it's safe to expect higher tariff rates and more countries affected than in the past. What's different this time around is the scale of the tariffs. President Trump's first term had more targeted tariffs. This round looks broader and more aggressive. But remember, these things can shift quickly. Tariffs can go up or come off just as fast. All of this has pushed global policy uncertainty near its highest level in years, almost where we were during the peak of COVID. And it's likely to stay elevated for a while as conversations around trade evolve. On the economic front, things are actually holding steady. Unemployment has been pretty flat so far this year. Inflation, measured by the Consumer Price Index, is still sitting around 2.8%, the same where we ended 2024. The Federal Reserve has not made any big moves yet, and the yield curve is what we call a bull flattening. Essentially, long-term rates are falling faster than short-term ones. So to sum up, the first quarter reminded us that the market is not all about the big names. Policy changes can shake things up quickly, and sometimes the boring stuff, like diversification, is exactly what saves the day. So thanks for tuning in, and as always, invest wisely and live richly.